Well, we've got some news coming in. Well, the much-awaited overall of the F&O trading criteria has come in. Now, we understand that SEBI has put in place curbs for trading to essentially tame the trading frenzy. And joining me on the broadcast right now is Sajit Mangat. He has more details of what has come in. Hi, Sajit, take us through what we are learning.
Yeah, that's right. Finally the circular which we were talking about since morning has been notified by the market regulator, and it's pretty much in line with the consultation paper which was floated by the regulator in July. And based on that, there has been quite a few of the recommendations have gone through, and they have basically decided to implement the entire circular going forward. Exchanges will have to implement it in a phased manner because there are already existing contracts in place. So in a phased manner, they will bring in all the changes, which includes a couple of things like margin extreme volatility margins, which will be there, intraday margins, which have been there. So increase the size of the contract, because currently the contracts are between 5 to 10. It will go up to 20 to 30 lakhs there, which basically means that anyone who wants to buy one contract going forward will have to pay up at least 3 to 4 times what he or she is paying now for index options contract. The bigger thing which is there is that now the regulator has limited the weekly option to one benchmark index in each exchange, which basically means that Nifty 50 will be one of them from NSE, and the Sensex option futures and options will be one, which will be there from the BSE. There is no limitation on the index product as such for monthly options, but weekly it has now been reduced to one. Remember, we were trading almost one expiry a day. On every day of the week, there used to be one index which used to expire. That used to create a volatility and speculation. The purpose of the regulator is to bring down that volatility and speculation and reduce the kind of exposure that retail investors have in this market. There has been already a couple of surveys in place which has spoken about the kind of losses retail investors have taken as a result of the exposure to F&O or futures and options market there. So yeah, so it's pretty much in line with the thing. There was some kind of apprehension yesterday when the SEBI board meet happened and the release didn't have anything on the F&O curbs. But as we said in the morning, that the curbs will come in because it's part of the circular, and the circulars are not taken to the board for approval. It's an administrative process, and so SEBI will soon notify the circular.
All right. Now, as you're pointing out, of course, this is quite in line with what we were expecting. We are given to understand that it comes in place from November. Now, how do you see the impact of this now going forward?
That's true. Just to give a perspective to all our viewers, there already exist contracts in place. What market regulator is saying that they don't want to do it in one go because people have existing positions which they have already taken in. So it comes into play more from November. So there is already 3 or 4 contracts for weekly contracts which have come in. So the weekly contracts from month of November is when it will get implemented. In this fashion, there will be a notification that will come in from the stock exchange soon, which will elaborate more on the strike prices, more on the kind of size of the contract. All this will be more clear because it's up to the stock exchanges to implement that. As you said, this entire thing would be introduced from November 20th onwards. And so there is a month and a half before that can happen.
All right. So we'll have to wait and watch for whether, SEBI's aim of essentially discouraging retail investors actually, these new measures hit the nail on the head or not. I'm going to try and go across right now Okay, we'll go back we'll go across to Rajesh Palavia in just a bit. But as we were pointing out earlier, Sajit, obviously the aim for SEBI right now is to make sure that they are able to discourage retail investors who were losing a lot of money in F&O trading. Do you think that this perhaps is going to deal with that problem?
See, what we see, what we have seen from various reports and surveys, and the National Stock Exchange and the SEBI in various reports have mentioned that the average ticket size for people trading in options, especially the weekly options, is around 6,000 rupees or so. Uh, that is something which is a cause of concern for the regulator, because that brings in more speculation, brings in more investors who are not educated enough to deal with complex product like futures and options, and you end up nearly 93% of them end up losing money because of the investments. And that's not a healthy sign for the market as well, because when you lose money in the market, you lose confidence in the market, and then you don't invest in the market. The regulator wants it very clearly that it should be a very educated call to come and invest in the market. They encourage investment into the cash markets where you can buy stocks. They also are not opposed to investing in F&O market, provided you have the ability to understand the market and trade accordingly. One thing is very clear from the service is that the more time you spend in the market is when you get to reduce your losses. That's the case both in cash market as well as F&O market. But it's time you spend in the market is when you get to learn how to trade in the market there. The other concern which has been brewing from not only the regulators but also from the finance ministry is the shift of household savings from bank deposits to the futures and options market, and that is something concerning. That's something concerning for the market, for the regulator as well. So far, if you see a year back, the market regulator was not so concerned about it, because investing is a decision which is left to the individuals. The market regulator was only concerned with respect to the market risk and whether it creates a systemic risk or not. The macroeconomic changes and the systemic changes which is coming in is going to
Sajid?
disturb
Sajid,
yes.
let's just get in a word from Rajesh Palavia, who is joining us on this. Rajesh, finally, we are seeing the curbs that have been put in place by SEBI. Obviously, the aim was to curb retail investors from going into F&O. How much of an impact do you think this will have?
So definitely there was a concern for the retail investor to protect the interest of retail investor. This major 3-4 curbs they have already in this circular. So the first one is the major activity which was happening on the daily option expiry, which is happening on the exchanges. So per exchange, one weekly expiry, that will also down these kind of speculation activity especially on the day-to-day basis for the indices which retailers are participating in this market. And again, the lot size has also increased to the 15 lakh. This will also restrict them to participate, those who are having low capital base. So basically, this measures which they have announced in this circular is clearly to protect the interest of retail participants, those who are novice in market and those who are not having that much of experience in the derivative market, and they are just playing the market as a speculation activity on expiry days. So this will curb those kind of activity. Yes, definitely it will give impact to the market on an immediate basis. Maybe we can see some volumes to be shrink for the options trading especially. So, but yes, it will protect the retail investors from losing the money which they are losing on a daily basis, or majorly the concern is on the to protect their interest. So I think this will help. These two major impact, two major initiation. One is one exchange, one weekly expiry, and second one is to increase the lot value also. And now they will charge the upfront premium also, even on the selling of options on expiry, that they will increase the margin by 2%. So this will also, restrict some of the retail participants, those who are just playing the writing of option just to, pocket the premium. So I think majorly the margin requirement as well as the deployment of capital has been increased by putting all these measures. That will really help the retail investor to protect by losing the money. So I think these measures will give impact on the market on an immediate basis to dry down some of the volumes on an immediate basis, and the activity and participation will go down.
Rajesh, the regulator has given a glide path to implement all these measures. It goes all the way up to April 1st, 2025. Do you think that that's a fair way to bring in all the curves? Because your intraday monitoring of position limits, all those come into effect from April 1. The removal of calendar spread treatment and upfront correction of option premium comes into effect from in February. It's only the short-term measures like the contract size, rationalization of weekly index derivatives, and increase in tail risk coverage, which is extreme loss margins that comes into effect from November 20th.
So I think this weekly one exchange, one weekly expiry will take effect from the November itself, and I think yes, the calendar spread and other things will take effect from the Feb 2025. So I think yes, they have given a sufficient window, because the major participation in these kind of spreads and other things is done by the major those who are having prop books or algo trades, those who are running their strategies by doing this kind of calendar spread to get the benefit of margin. But retailers generally play in the market on the plain vanilla side. They are just option buyer or seller. They are doing one leg strategy generally, but this calendar spreads or these kind of strategies is majorly run by the those who are seasoned trader or prop desk or algo trades or strategies. Those who are deploying on the market, they are getting the benefit of this calendar spreads. But now by removing this, I think it's a level playing field for everyone, because they will require higher margin to deploy if they want to do these kind of strategies. So I think removal of this calendar spread benefit will have an impact on the margins. So I think that will discourage the benefit of this calendar spread. So I think again it will be a level playing field between the retailers as well as those who are having a high capital base.
So Rajesh, you think that these measures will go a long way? Let me also bring in Mr. Sunil Subramaniam on this. Hi, Sunil, how do you see these measures? Now, the basic aim of SEBI was to curtail retail investors from losing money. Do you think that these measures will essentially provide for that?
Yes, I think so. I think they will work towards that. And you will see that retail will probably, and you can connect this to yesterday's regulation around the new investment strategy set of schemes that MS can launch, where naked shorts are going to be allowed by fund managers. So this will probably drive them to a more regulated piece of the market rather than trying to do on their own. So I think on the whole, it's something that will protect retail investors.
All right. Right. Sunil, stay with us. I think we've also got Agam Vakil joining in with a question for you. Agam, I think you have a question for Mr. Subramaniam. Please go ahead.
Right, Mr. Subramaniam, my question actually is to do with the kind of impact that we may see on listed players. One of them, of course, is the BSE, which in fact did see a considerable rise in not only its revenue and bottom line, but we've also seen a lot in terms of price action. And Mr. Subramaniam, again, I understand if you can't be stock specific, but in general, in terms of the kind of impact that it can have with respect to revenues for exchanges, it could be substantial, because ever since we've seen that introduction of weekly options expiries, We've also seen a little bit of surge in revenues. That's one. And the second impact, of course, is the discount brokers. There are several out there which, in fact, have seen once again an increase in revenues on account of the churn in activity that we've seen. Going forward, do you think that there could be some amount of weakness that we could expect on not just exchanges, but brokers as well from the listed space?
Yeah, I agree with you. That there will be definitely impact. In fact, Mr. Kamath of Zerodha had hinted at this when they did their quarterly earnings thing, and he was discussing it. He said that, look, I don't expect this to last for very long because I expect SEBI to come out with strong measures. And, these brokers were actually making money off the F&O trade because they're offering free, otherwise, broking the thing. So definitely, I will see an impact on the margins for both discount brokers as well as exchanges. To what extent the market prices will reflect that is anybody's guess, but definitely there will have to be a re-rating of these. I agree with you there.
Mr. Subramaniam, going forward, what are the kind of measures that a lot of these exchanges and brokers will have to take in order for them to cover up these losses? There's plenty of innovation in terms of the kind of products that are putting up, but it just seems like all the products that are being introduced is to largely entice the speculative corner of the market participants at the moment. But I'm sure that can be plenty which can be done going forward in terms of investments as well. At the end of the day, how do you also see that the foreign investors will look at this development? Because in many of these developed markets, we do see a relatively free-flowing take on the derivatives. In fact, leverage is potentially can be taken to infinity. How do you think the foreign investors will see this?
I think the short-term foreign investors will definitely be concerned because this will impact liquidity in the market. So if a significant chunk of retail investors is going to be leaving this space in the market, so their ability, they will factor in certain extra caution on the ability to sell. So what will the losses be, the transaction cost be when they come to sell or do a counter trade? So definitely there will be some reassessment. But I think overall, if you saw, like these prop books of these FIIs and all have been making a lot of money. So it's just a readjustment there. But I can't say that it will be without impact. Definitely there will be an impact on them in terms of the liquidity in the Indian market. The factor that they put in to correct for that, right, compared to other emerging markets, definitely there India would come off a little bit worse at this point in time compared to what it was before this regulation.
Sunil, one question from my end to you. Do you see now that there would be a significant decline in the way the retail participation, retail individuals participate in this market, given the fact you have tightened the norms with respect to size of the contract, intraday margins, extreme loss margins, and all other, measures which have been taken? Will it dissuade retail investors from coming into the F&O market?
I would like to take the answer for this from a correlation to a completely different industry, and that's the gambling industry. And I've seen in Singapore, where I'm currently based, that no amount of these restrictions prevents a gambler from reducing his thing. The gambling instinct will come in. So I don't think it's just that their costs and their losses will probably go up, but they can't be prevented from taking these funds. So I don't expect any significant drop there, but definitely because of these, their costs and their losses will go up. But that's part of the game. So essentially, if you look at these, I think market frequently uses the term investors for these people. I don't think they are investors, they are speculators, as you rightly put it. And so for a speculator, it's always a risk-reward play, right? Now the costs have gone up, so you'll expect a higher reward, and its trades will be accordingly that way. So I actually expect that they will now take even more risk to compensate for these additional costs. So the gambler's instinct will never go away.
Also, if you can bring in some context to what is the kind of dynamics change that will happen now to the entire broking industry, because the entire discount broking industry, flourished in the last 4 to 5 years because of the kind of inflow of new investors coming into this market, and especially into the F&O market. Do you see now some consolidation happening within the industry as a result of this hit?
Expect that in the natural course of time. because obviously the kind of margins and they've been running on a kind of fabulous ride. I don't think that was sustainable, and to the extent that the market assume that was sustainable, there will need to be a correction in terms of their re-rating. But I think that there will be consolidation, because ultimately now it will become more of a volume game. The only way you can compensate these losses is by increasing the scale. So I do expect some amount of M&A to happen here, so that the big scale players can then manage these things. So yes, I do think that there will be consolidation and some amount of M&A here.
All right. All of you, gentlemen, do stay with us. Let's also bring in Charu very, very quickly. Charu, obviously the aim of the regulator has been to curb a lot of retail investors who have burnt their fingers from doing more so. Now, these regulations, I understand, come into effect on the 20th of November.
Yes. Hi, Nopur. So, tentative dates have been given for all the regulations that have been brought in the circular from SEBI. Upfront option premium collection will be applicable from February 1, 2025. Then no calendar spread benefit on expiry day, which means that expiring contracts will be starting from February 1, 2025. Then you have intraday position monitoring. Exchanges will monitor positions at least 4 times daily from April 1, 2025. Then penalty for intraday breaches. Penalties for exceeding limits during the day will match the end of day penalties, and increased contract size. This is the most important one. The minimum contract value for index derivatives will be raised to rupees 15 lakh starting November 20, 2024. Earlier this was only 5 to 10 lakh and it was last updated in 2015, and now we have a much more increased contract size.
All right. As you were pointing out, of course, these hopefully will deter some of these retail investors. Let's go across very quickly to Mr. Ashish Rathi, who's the whole-time director of HDFC Securities. Mr. Rathi, good evening. Thank you for joining us. What do you make of these measures that have been put in place by SEBI? Do you think that they will be effective in deterring retail investors?
So, hi, good evening, Ashish here. I think the final circular is in line with what was there in the discussion paper. Obviously, the discussion paper of SEBI had 7 points. I think the 1 point they have not put it in the circular, which is pertaining to strike prices. So all the other 6 points they have put it in the circular along with dates for implementation. What I can see is the weekly expiry, which is now restricted. I think that definitely will have a dent in terms of volume. And the increase in margining that they have proposed on expiry days, and plus intraday also upfront collection of options margin, that definitely also will have an impact on retail volumes, is the understanding that we are getting as of now. But we will have to wait and see once these get implemented. That's my viewpoint.
Ashish, and I was checking with Sunil as well on this. How do you see the broking industry now coping with these new dynamics? Because there will certainly be a decline in the volumes, daily volumes coming in once this entire framework comes into implementation. So, how do you see broking industry managing this hit? Rajesh? Rajesh, can you answer this question?
So definitely it's going to give impact to the broking industry also, especially the discount broker, because the changes in the slab structure that has also given the impact to the discount broker, which has implemented from the 1st of October. And again, these new measures which the SEBI has announced today will also going to hit in a big way to the discount broker or those who are having very low brokerage structure, because the major F&O volume and participation on options were happening at those kind of brokers, because the cost is the key element for the option trader. And where they have very low cost, they tend to take a big position in the market just to just in anticipation to get out from those trade quickly once they are, above the break-even point of their cost plus their premium. So this tends to, increase the volumes at where they have very low brokerage structure or, very low cost when they execute the trades. So I think this is going to impact on those kind of brokers. Definitely, it will have an impact to overall volumes of the exchanges also, because a lot many benefits. Many benefits.
Rajesh, I'm sorry to butt in here. I think we have Sandeep Parekh as well from FinSec Law Advisors. Sandeep, how do you see this regulation in light of the fact that there is a broader debate which is going on the F&O and the kind of retail participation that's going into this segment?
Yeah, hi. So I think it will have a fair amount of impact on the trades which are going to happen from November onwards. Essentially, I think they're implementing all the recommendations which were already in public domain and which were recommended by the committee, including higher upfront collection of premium, removal of some of the expiry dates. The weekly options are restricted. Contract sizes are increased. So I mean, basically, it's a means of putting sand in the wheels, and I think the idea is to kind of protect the investors from themselves. And I think they're not doing it by saying you can't do it. They're just making it much more expensive and more restrictive to trade in F&O.
Do you think more restrictive actions can follow on this, given the fact that some of the panelists are saying that even though you are going to increase or make it difficult for the retail investor to come into this segment, if someone wants to do speculation or gambling, as they call it, they will continue to do so?
So I don't expect anything further. This is exactly what they proposed earlier, and this is what they're implementing. So I think it's reasonably clear that nothing else is now going to come for increasing the restrictions. I think this seems to be it. But I mean, it's going to be implemented over the next month or so. So we'll get to see, I guess, pretty shortly, what the impact of this is going to be on the actual volumes of the market.
Ashish, can you come in here? I was asking you about the kind of impact that it would have on many of the discount brokers. What is the kind of hit that you see on the top line and the EBIT levels for many of the brokers?
See, the measures are going to get implemented over a period of time, and where the dependency on brokerage is very high on derivatives, and as the volumes in derivatives are bound to get a bit lowered with all these restrictions. Right now, we don't have an estimation of any number which will impact, but definitely if we expect a 20% dip in volume, which we will have to see obviously how it goes about, then obviously their top line might also dip by 20% volume. So it will run in conjunction with whatever the volume dip happens in derivatives.
It's coming on the back of multiple things which have been put in place from October 1, from today as well. You have the SCT changes which is coming in, which increases the entire cost for the investors, and then you have the true to label regulations which have also come in. Do you think that all these together will be able to bring down the speculation and that we have seen, or the kind of interest that we have seen from the newer investors who are coming into the market?
So, yes, I think so. In terms of transaction cost, I mean, what has happened previously is we have true to label, which has come into effective on 1st October. Secondly, the options STT also increases effective today. And thirdly, now with this circular also coming into picture, definitely there could be dip in volumes in derivatives. But I wouldn't say that we will have no speculators or jobbers, because these are the guys who still will be there in the market, and these are the ones who provide liquidity to the market, which is also an essential part. So if we think that we will have only pure investors and not these kind of speculators, then I don't think so it will work out that way. We will still have some amount of players of this category into the market, and which is essential also for the market to provide liquidity to the market.
All right. Thank you, all of you, for joining us on this breaking news. So finally, the SEBI curbs are now coming into place. We're given to understand that they begin from the 20th of November. They're largely to ensure that retail investors are deterred from the losses that they have been making in the F&O trades.